G'day traders, Sam here from TradeToProspa, here to give you a GMX perspective on what's likely to take place and my interpretation of the charts. So let's begin with this broadening wedge and the elite wave count. So what I have here is the 1, 2, 3. Obviously these wicks are really high, 4, 5. So these wicks are problematic, but what we try to do is make sense of it. And what I've done, if you look at this line, is one bounce, two bounces, and three bounces. So, and then we break this trend line, this support trend line. So it makes sense from that perspective. That is a broadening wedge, and for those who are familiar with the Livermore strategy, it fits into that. What we have is also, as this goes up as a broadening wedge, we have our neckline, and it's pretty rough to do it, but I think this is sort of fair where I got it to, that this is the neckline of some sort, just by observation. Because once we broke, and the alley wave count as well, once we break this neckline, supposedly necklines, see how this comes all the way down, so that's really problematic in some cases. And you try and find some common ground. So I do think that that was a neckline here, from there, and here there's a bit of support, a bit of activity, and then there's resistance, and therefore I'm seeing as the neckline. Once we break that, it's going to be resistance. So this broadening wedge, we break out of it, and a classical case, this actually works pretty well in that sense, that this is a shorting position. There is that case where the trend line, this trend line, could also be the resistance line as well. Now, what I have also here is very difficult. I can say that candle there, that wick there, and that's probably makes sense. And you can see my Fibonacci come down, and the 1.6 comes all the way down here. But if I don't take that wick and I just take this neckline, you can see how my Fibonacci ends up here, or the 1.618 ends up there. So it's very problematic with this wick. So if we leave it there, and you can see my swing high to the swing low, back to the swing high, we get this Fibonacci levels. And if I could increase it or make it thicker, you see that there. Okay, what I want to do is break this down more. So at the moment, this is a classical case where if you know your broadening wedges or funnels, you have that formation, and you have your 1, 2, sometimes it goes to there, and sometimes it goes halfway, and it breaks that level. And then somewhere you find a resistance to come down. So if that's the neckline, you might find it to drop down, or the 618, if you do from there, 618 there, and comes down. So these things pop into my mind when I look at this chart. So moving along, knowing that the Dixie and the SP500 could likely have a bounce, then we can say that we can potentially come to this level here. You can see this level of the 618 could act as resistance, and then just come down from there on this grind line. Otherwise, it can probably hit this level here. That's previous resistance, and that touch there again, and then drop. I do find it very unlikely that it can go to the 0.5 level, but it's very possible, depending on what the charts do. But here we could see a lot of resistance historically, so I think this will be another resistance level. However, there's all these levels, and the worst case scenario that, well, this might be able to go all the way up here, but I don't think that's going to be the case. If you want to understand why I think that way, you need to look at my previous video on the stock market, especially SP500 and Dow Jones, and the levels that they might reach might be synchronized to this level or potentially further higher. And so where I think there's a reversal or a relief bounce on the SP 500 or the Dow Jones, that could be in sync with one of these levels. And then I expect to come down. First target is that, which equates to this level of a broadening wedge, and that's typical. That range will be the first target, and then potentially this level where it touches that trend line, and you can see with my dotted lines, this is one of my areas of interest for accumulation. And depending how I look at the charts of the stock market and so on, I might average in here or go in more, but I do think that there might be that possibility that you come down further between these two here, and that's what I got the chart. So yes, I am bearish, and you should be bearish as well. There might be some relief bounces, but you surely can see what's happening on the markets, and a lot of experts are pretty much forecasting a big recession next year in 2023. That will probably give us even probably a deeper drop. You don't know, but you need to watch my previous video for understanding how far I think it will drop on the stock market. So I'm going to leave it at that, guys. Hopefully this helps you out, but please give me a like and share. Tick that box, subscribe, and I'll talk to you soon. Cheers.